Welcome back to Investing Talk Podcast. Today we're tackling an electric vehicle enigma that many of you have asked about, NIO. It's a company with, well, grand ambitions and some undeniable growth, yet it seems to burn cash at an astonishing rate. Can it ever truly turn a profit? That's the big question, isn't it? We've sifted through a mountain of recent analyses, market reports, and financial data to try and unearth the truth. Our mission is to arm you with the critical insights needed to navigate the high-stakes world of EV stocks and ultimately help you decide if NIO is maybe a gamble worth taking. We'll be breaking down NIO's current situation, its financial health, market position, what the experts are saying, and what's potentially on the horizon. Our goal is to give you the clearest, most concise picture possible, helping you cut through some of the noise. As we get started, if you find this discussion valuable, please consider subscribing, liking, and leaving a comment. Your engagement really helps us reach more curious minds. And if you'd like to support us further, you can also consider buying us a coffee. The link's usually down below.
Also, if there's a specific company you'd like us to look into, please, leave a comment below after this discussion. Okay, let's unpack this. NIO, the prominent electric vehicle maker, is certainly a name that sparks a lot of conversation, both excitement and, frankly, a fair bit of caution. All right, let's pull back the curtain on NIO's fundamental health first. What are the cold, hard numbers telling us about their revenue and maybe more critically, their financial stability right now? Are we looking at a robust engine or one that's kind of sputtering?
Well, what's fascinating here is the sheer contrast. Our sources show NIO reported a trailing 12-month revenue of approximately $9.35 billion. Now, that's robust top-line growth. You can't deny that. However, and this is the big but, to put that in broader context, the company remains deeply unprofitable. We're talking a net loss of $3.35 billion and negative EPS of minus 1.62.
Wow.
So the critical question here is, can they bridge that massive gap between impressive sales and actual profit? It's sort of like a sports team scoring a lot of points, but, well, losing every game by a wide margin.
So it's that classic growth stock dilemma then. Surging sales, but deep in the red. This definitely raises a crucial question for investors. How long can they sustain this kind of burn rate? What do our sources say about their future projections and, critically, their cash flow situation? Are they, building a house of cards or maybe laying solid foundations for future profit down the line?
Analysts are certainly projecting aggressive growth. They're anticipating a doubling of vehicle deliveries by 2025 compared to 2023's output, which was around 165,000 units. So that's a strong sign of ambition.
Okay.
Yeah.
Doubling. That's significant.
It is. But financially, that foundation, it isn't solid yet. Those significant losses persist, and NIO's cash flow remains deeply negative. This is largely because they are just pouring vast sums into expansion, new product development, and research.
Yeah.
Exactly. They're spending heavily to scale up, and that means their debt levels and liquidity pressures haven't eased, which, tells us they might need to raise more capital in the future.
Which could mean dilution for shareholders.
Potentially, yes.
Right.
Diluting existing shareholders is a definite risk.
That really paints a picture of growth at a very high cost.
Yeah.
This naturally leads us to wonder, how is NIO holding up on the battlefield? How are they truly positioned against the competition, especially in their crucial home market of China?
Yeah, NIO is certainly a key player in China, a premium brand in the EV space. But the competitive pressure it's immense. It's a true EV gladiatorial arena over there.
Gladiatorial arena, I like that.
Our sources highlight how domestic giants like BYD are rapidly expanding their affordable to mid-range offerings. They're leveraging their in-house battery tech and immense scale and essentially eating away at the mass market. At the same time, you've got global automakers aggressively entering the EV space, often with vast production capabilities and established supply chains that NIO, doesn't yet have.
Right.
This puts NIO in a really challenging position trying to compete on multiple fronts, which is why they've launched those lower-priced mass market brands like Onvo and Firefly.
Oh, okay. Trying to broaden the appeal.
Exactly. But the challenge, of course, is that these lower-margin products could pressure overall profitability even further.
That makes sense. They're trying to grab market share, but it's a tight squeeze, isn't it? You mentioned NIO's unique battery swapping service earlier. Our sources also call out its premium technology positioning. Are these differentiating factors enough to carve out a profitable niche in such a crowded market? Or are they maybe just adding to the cost burden?
That's a great question, and it really gets to the heart of NIO's strategy, I think. While the battery swapping service offers unique convenience, definitely a strong brand differentiator for customers, allowing for quick refuels rather than long charging times.
Which is appealing for sure.
Very appealing. But our sources highlight that the sheer infrastructure cost required to scale this service globally has become a massive financial anchor for them. It's not just a lack of sufficient advantage, it's actually a feature that's proving to be a colossal drain on capital. It's significantly prolonging their path to profitability, even as it attracts some premium customers.
Wow, a financial anchor.
Yeah. And their premium tech, while impressive, similarly hasn't yet translated into sufficient cost or scale advantages to really drive profits. It's a bit like having, I don't know, a Rolls-Royce engine in a car, but the fuel costs are just too high to ever make a profit selling it.
So they're innovative, definitely, but that innovation comes with a hefty price tag that they just haven't recouped yet. Given this financial picture, which is clearly still, well, developing, how do we even begin to value a company like NIO? What do the common valuation metrics tell us, especially for a company not yet making money?
Right. Since NIO is, as we discussed, currently loss-making, it doesn't have a PE or forward PE ratio, which are, standard for profitable companies.
Okay.
That's pretty common for growth companies still chasing profitability.
Yeah.
What we can look at is its price-sales ratio, the PS ratio. It's roughly 1.15x. That's based on a market cap of about $10.92 billion and that revenue of $9.35 billion we mentioned.
And how does that 1.15x stack up?
Well, to put that in perspective, it's slightly below the global EV sector average. This lower ratio reflects the market's, frankly, weak sentiment and that persistent lack of profits. It essentially says investors aren't willing to pay as much per dollar of sales compared to other EV players who might be closer to profitability or have clearer paths.
Okay, that makes sense. And what about more complex valuation models or what the professional analysts are predicting for price targets? Are they seeing something different?
Well, discounted cash flow, or DCF valuation, which tries to project future cash flows back to today's value. It's particularly problematic for NIO.
Why is that?
Because of those negative cash flows we talked about and the sheer difficulty of forecasting a realistic timeline to when they'll actually be profitable, it's like trying to predict the exact path of a storm that's still forming way out at sea.
Gotcha. Too much uncertainty.
Exactly. Relative valuation, using that PS ratio we just discussed, shows it's modestly lower than competitors, again reflecting that broad market skepticism. What's truly striking, though, is the dramatic range in analyst price targets. Some are highly optimistic, projecting prices as high as $17.84 for 2025.
$17? Wow. Okay.
But the consensus targets are clustered much, much closer to current prices, around $4.80 to $5.
Big difference there.
Huge difference. This wide dispersion signals significant uncertainty among the experts about NIO's future. Even the pros are deeply divided on this one.
Here's where it gets really interesting for some people. Beyond the fundamentals, what does the stock's recent price action and technical indicators suggest? For those looking at the charts, where is NIO trading right now, and what's the story the market itself is telling us?
Yeah, looking at the chart, NIO has recently been trading in a pretty wide range. We're talking $3.02 up to $7.71 over the past 52 weeks. Currently, it's sitting near $4.80. It has seen a modest rebound from those multi-year lows hit back in April 2025, but let's be clear, it remains down significantly from its pandemic-era highs.
Right. Still way off the peak.
Way off. For technical traders, key near-term resistance, that's where the stock might struggle to go higher, seems to be around $5.10 to $5.50. Strong support, where it might find buyers, looks to be around $4, $4.20.
And if it breaks that support?
Well, there's definitely further downside risk if those support levels break. It could fall further, absolutely.
Okay. What about those crucial moving averages and other key indicators that traders watch closely? What are they signaling right now?
On the technical front, the 50-day simple moving average is at $4.08, and the 200-day SMA is $4.26. Now, sometimes when the shorter-term moving average is above the longer-term one, like it is here, it could signal a possible base formation or maybe a shift towards a more positive trend, but it's not a strong signal yet.
Okay, a potential positive sign, maybe.
Maybe. The 14-day RSI, the Relative Strength Index, sits at 52.2. Think of RSI as sort of a speedometer for stock price movement. A neutral reading like this means there's no strong momentum in either direction right now. Volatility here is still punching high, though, at 10.41%, meaning those price swings can be pretty wild day to day.
So not for the faint of heart.
Definitely not. And while it's been green for about 50% of recent sessions, don't let that lull you into a false sense of security. Its beta is a hefty 1.42.
Beta. Remind us what that means.
Right. Beta measures volatility relative to the market. A beta of 1 means it moves with the market. Over 1 means it's more volatile. So 1.42 means if the overall market moves 1%, NIO could typically move about 1.42% up or down. It's significantly more volatile.
Got it. Higher risk, higher potential swing.
Precisely. So the current trend appears to be kind of sideways with maybe a mild bullish tilt, but the overall technical setup is, frankly, fragile.
Given all this, how are recent news headlines and overall market sentiment impacting NIO? What are analysts saying now, and what's the general mood out there?
Well, the analyst consensus is generally hold right now.
Yeah.
The average price target is just slightly above current levels, around $4.92. Reports of, slowing China EV deliveries and production overall have definitely weighed heavily on sentiment recently. However, some recent delivery growth numbers from NIO, following some of their new product launches, especially for those mass market offerings, that has provided a bit of much-needed optimism, a little ray of light, perhaps.
Okay, so a mixed bag on the news front.
Very mixed.
Yeah.
And as we noted earlier, those price targets are still widely dispersed, which really reflects that significant uncertainty among the professional community.
And what about insider activity? Are the people running NIO buying or selling shares? And how about the broader retail and institutional sentiment?
Our sources indicate there hasn't been any significant insider buying or selling reported recently. Sometimes that can be a subtle signal of confidence or concern, but right now it's quiet on that front.
Okay.
From a social media and retail investor perspective, sentiment seems to skew somewhat bullish in the short term. There's still a lot of enthusiastic chatter online.
The NIO army, as they sometimes call it.
Right. But broader institutional sentiment, big money managers, they seem much more cautious. And if you look at the broader market context, the fear and greed index is currently at 39. That indicates fear in the market overall, which tends to add another layer of caution to high-growth, high-risk stocks like NIO.
Okay, that context is important. Looking forward then, what events or developments could significantly impact NIO stock price, both in the short term for those looking to trade and maybe over the long term for those with a more patient view? What should we be watching for on the horizon?
In the short term, you'll definitely want to keep a close eye on their Q3 2025 earnings announcement. That's scheduled for September 4th, 2025.
September 4th, okay.
Any surprises there, positive or negative, could trigger big moves in the stock price. Also, the monthly production and delivery updates are key, and especially the market's reaction to the sales performance of their new mass market brands, Onvo and Firefly. How are those actually selling?
Right. Are they gaining traction?
Exactly. From a macro perspective, keep an eye on any potential Chinese government stimulus measures or news on tariffs and trade deals affecting the broader EV sector. Those could be significant for NIO too.
And for those with a longer view, perhaps wondering if NIO could eventually, become a dominant force, what are the long-term catalysts?
For a longer-term perspective, it really comes down to NIO's execution. Can they execute successfully on international expansion? Can they truly solidify their premium brand positioning outside of China? Those are big ifs. Breakthroughs in battery technology or significant cost reductions would obviously be huge game changers. That could potentially accelerate their path to profitability. We should also consider potential M&A activity, joint venture partnerships, or maybe any government regulatory shifts down the road that might specifically favor NIO or the broader Chinese EV industry. Lots of possibilities, but also lots of uncertainty.
Now, for maybe the less exciting but equally important part, let's talk about the risks. What are the major stock-specific and broader market factors that could negatively impact NIO, perhaps even derail its progress?
Yeah, this is where critical thinking really comes into play for any potential investor. What are the potential pitfalls? You have to ask this. Stock-specific risks primarily revolve around those persistent losses we keep mentioning and the ongoing uncertainty over their pathway to profitability. When will they make money, or if?
The million-dollar question, or rather billion-dollar question.
Yeah. Exactly. There's also that very real dilution risk from future capital raises. If they need to issue more shares to fund operations, your existing shares could be worth a smaller piece of the pie. Then there's significant execution risk related to successfully launching and scaling those new brands, Onvo and Firefly. It's no small feat to launch new car brands effectively.
No, definitely not.
And they also face weak pricing power in this incredibly competitive market, plus potential further margin compression, meaning their profit per vehicle, if they ever get there, could shrink even more.
Okay, quite a few company-specific hurdles. And beyond the company itself, what about the wider market forces that could impact NIO?
Well, from a broader market and sector perspective, tariff and trade war volatility is a constant overhang that could heavily impact Chinese exporters like NIO, depending on how geopolitics play out.
Right, that's always a factor with Chinese stocks.
Always. Macroeconomic slowdowns, particularly in China and Europe where they operate or plan to operate, are also major concerns. Slowdowns could dampen consumer demand for big-ticket items like EVs. Intensifying EV competition from established players, think VW or Ford, and newer entrants, especially those with greater scale and R&D advantages like BYD. That's a constant and, frankly, escalating threat.
The competition isn't letting up.
Not at all. Lastly, fluctuations in government subsidies and evolving regulatory risks can significantly impact the EV market, sometimes practically overnight. Policies change, and that affects the bottom line.
So, taking all of that into account, what does this all mean for our initial question? Is NIO a good time to buy right now? Pulling all these different threads together, what's the bottom line from our sources?
Yeah, if we try to synthesize all this, our sources indicate an overall rating of about 4 out of 10 for NIO right now.
4 out of 10. Okay.
It's categorized pretty clearly as a high-risk, high-reward speculative stock. While the company offers, attractive top-line growth and ambitious market share expansion plans, it faces persistent and significant losses, poor cash flow dynamics, and substantial competitive and execution risks that are just really difficult to ignore.
That's a very clear summary, I think, offering both the potential upside, that speculative element, but also highlighting the significant caution needed. So, who is this stock for, based on our analysis of the sources? Who might consider it?
Well, the technical picture is kind of neutral with maybe a slightly bullish tilt, which might catch the eye of some short-term traders looking for a bounce. But the fundamentals and the valuation simply do not currently justify a strong buy case for long-term investors. Not right now. The lack of near-term profitability and those continuing funding needs weigh really heavily on its long-term prospects. So, our sources conclude that NIO is probably more suitable for short-term trading, particularly for those who are comfortable capitalizing on volatility and potential short-term bounce scenarios around catalysts like new product launches or maybe earnings beats.
So traders, maybe, but not long-term investors.
It is not recommended for long-term investment at this stage. That's the consensus from the analysis, mainly due to those poor profitability metrics, the ongoing financial risks, and the significant execution uncertainties ahead. It feels much more like a potential sprint than a marathon for most investors right now.
That's a powerful distinction and really crucial for our listeners to understand, I think. Thank you. For you, the listener, as you consider all this information, here's maybe a provocative thought to chew on. In a rapidly evolving market like electric vehicles, is it ultimately more valuable to bet on a unique technology and a premium brand, even if it comes with a high burn rate and maybe a distant path to profit? Or is it wiser perhaps to stick with a proven, albeit maybe less flashy, business model that prioritizes slower, steadier growth and established profitability? Something to think about. That's it for today's analysis. We hope this conversation has given you a clear understanding of NIO's current landscape and helped you navigate this complex stock. Remember to subscribe, like, and please leave us a comment with your thoughts or any companies you'd like us to look into next. We do read them. Thank you for tuning in.